And welcome to this daily market commentary for Friday the 13th of September 2019. Friday the 13th, for the superstitious among you, a day to be avoided on the trading front, maybe a day to be avoided on every front. And after yesterday's volatility caused by the ECB rate announcement, the start to Friday felt very much like the beginning of a long weekend for many. The Asian and European sessions did see a little dollar weakness to begin with, as euro rallied to a high of 111.09 and sterling up to 124.76. Dollar yen slipped back the other way down towards 108. For sterling, there seemed to be some optimism around the Brexit deal as Boris Johnson prepares for meetings with EU officials on Monday. Crypto, for the most part, started out quiet, consolidating on yesterday's gains, with Bitcoin at 10,300 and ETH at 179. So Friday's US session would focus mainly on US retail sales data. The headline number ended up rising more than expected, up 0.4% against 0.2% expected. There was also an upward revision to last month's number. The reaction was to see the dollar claw back some earlier losses, with euro slipping to 110.70 and sterling falling back down as low as 124.30. At one point, dollar yen would end up going the other way, back up to 108.12. Equities open a little higher, along with what the futures have been showing earlier. The Dow Jones initially up around about 60 points. Gold slipped back down to 14.95. Market looking a little bit heavy, a little bit long there. Probably a little bit concerned about some of the moves in the US bond markets. The final piece of data on Friday was Michigan consumer expectations, which did increase marginally, but had a negligible effect on the markets. For FX and equities, that was really about as exciting as Friday got. I think there was a bit of a hangover from some of the moves, especially in FX from Thursday and the ECB rate announcement. The big moves really came in the bond markets, in the US bond markets, with the US 10-year yield jumping up to close around 1.9%. Remember, it wasn't that long ago we were below 1.5%. So for bonds, those are some significant moves. This in turn saw gold drop down to 14.86 on the day, and stocks ended the day mixed, with the Dow Jones once again marginally in positive territory, but the S&P and Nasdaq both slipped fractionally into the red. As I write this on a Sunday afternoon, I can tell you the weekend did bring an interesting development for the oil market, with Saudi Arabia's largest oil processing facility being hit by drone attacks. The US very quick to point the fingers at Iran, but regardless, it will definitely have an effect on the supply of oil coming from Saudi Arabia and on the overall global supply. Probably will be short-lived, one would imagine, depending on the damage, but could put some upward pressure on the price of oil on the open on Monday. And finally, for crypto, a mixed weekend. We have Bitcoin stuck pretty much around the 10,300 level, but we did see ETH jumping up as high as 190.85 at one point, and settling around 188 as I speak. So just to end the week, and just to take a quick look at the technical perspective for gold. Gold's had a pretty sizable move down from its highs. The correction in bond markets has really been the main catalyst for the pullback in gold as US rates rally. And here we can see, looking at an hourly chart, we have two significant support levels. We have this one here, which is fairly short term, just going back to the 10th of September. We hit a low of 14.84 before running back up towards 15.25. I'll get it out eventually. And then we have this low here, which was from the middle of August, the 13th of August, at 14.80-ish. So we closed around 14.88, so not a million miles away. Worth keeping an eye on those. Below there would potentially open up the downside to next support levels. There's a couple of lows made around here, 14.56, and then a bigger one here, probably around 14.53, and again 14.51. So a couple of small support levels there, but it would definitely appear the market is a little heavy and looking to test these levels here, 1480 and 1484. Obviously, much will depend on the market's perception of the chances of a recession and whether the bond market is going to continue to correct and push US rates even higher, which will, by definition, probably push gold lower. So we'll have to wait and see that one play out. Just keep in mind the gold play has been a very attractive one over the past few weeks, with the markets focusing on lower rates. So just want to keep an eye on. And with that, I hope you had an excellent weekend, and look forward to speaking to you tomorrow when the week begins. Cheers.